When filing your 2011 business tax returns, and you better be doing it if you want to hit the deadline, what are three common mistakes to avoid according to some information I'm going to share with you from Inc. magazine? Inc. magazine is absolutely one of my favorites. Actually, this is from their website, inc.com. And in an article by Jessica Stillman, dated the 14th, Jessica actually made a mistake in the very opening sentence. She says April 15th is looming, and yes, April 15th is looming, but that is not this year's deadline date. In January, the IRS came out uh, very early in January um, by saying that the deadline was extended to April 18th. Taxpayers impacted by recent tax breaks can file starting in mid to late February. Uh, by the way, I highly recommend that you go to the IRS website for the best information that you can possibly receive, certainly about taxes, because they tell you what's the expectation of you, so you can get a good guideline of what type of information that you need to provide. Of course, you fine tune that information with your CPA, your accountant, your tax preparer, whoever it might be that helps you to do your taxes if you do not do them yourself. And to that point, I want to share with you an exercise that I am currently in, and I highly recommend the exercise for you as you either start your business, and it's a great time to look at what the expectations are when you start your business, because you can go and find out what it is, the information that you have to report. And so that's a good place, a good outline from which for which you to develop some type of business plan. If you want to develop a business plan, you need to have your hands totally around a business strategy before you really can build the plan itself. But yeah, last year for the first time ever, I spent time on a line by line basis as to what my business was all about and the numbers that I had to report. In past years, I have simply, well, in the most recent past years, I have just taken the information that my CPA provided for me the year before and updated that information with the current tax year's figures. Then he would do whatever adjustments he thought were necessary based upon uh, changes in the guidelines, and then he would create my return. He actually, for the last couple of years, has e-filed it and charged me for all of those services. Last year, I took Rick I went out and I purchased TurboTax. Nothing at that point, nothing special about TurboTax, other than they had a very strong brand, very high profile. I knew a lot about them, but I had never used their software. But I figured it couldn't be all that bad. So last year I bought it and paid just under $50 for it last year. In doing so, uh, two extremely important things happened, which far exceeded the amount of money that I invested in the exercise. First thing that happened was I learned a tremendous amount of information about my business that I never paid close enough attention to. I knew the concept. I knew the number that I was reporting. I never really took a lot of time to understand how all of that works together. So I learned and it took me, I'm trying to remember, I'm sure less than 90 minutes to put in the information and get a printout. And I didn't file. My intent was never to file online. My intent was to uh, get that information, take it to my CPA, actually let him audit the information, and make any adjustments that he deemed necessary, and then do the filing. Well, in fact, the strategy worked very well for me because he he didn't charge me as much for his services as he did the year before because he had less to do for me since I was actually giving him the numbers on this year's return. So everybody, well, he got less for his. He got less money, but he maximized the amount of money that he did receive because he spent less time doing it. So it was in fact a win-win proposition for everybody. But what three common mistakes is Inc. magazine telling its readers and followers? Mixing the results were released this morning, being the 14th of March, revealing these common missteps. Number one, mixing business and pleasure. That is always a something that you need to be very, very careful as you are starting a business or you have a business. Really uh, don't overstate the situation as it is. Yes, it's harder uh, to to disprove information that a small business is giving, and that's not really the case. But present the very best information that you can. And when it comes to what is personal and what is business, make sure that business uh, only information is reported on your return. Number two, not deducting the home office. This is one of the most misunderstood concepts in the small business owner. I have always, for 40 years, had my home as my home base. And my thoughts over the years varied. It was a bedroom, it was a kitchen table. The kitchen table is the hard one to really charge off. You are absolutely allowed to take money, deduct get a deduction for amount of money spent on a home office. Once again, go to irs.gov, their websites, search home office, and I'm sure you will get as much information as you possibly want. But it tells you what the expectation of the IRS is in terms of reporting your situation to them. Now, the last 3 or 4 years, I have not deducted my home office when it's quite clear that I operate in my home. Uh, it was too difficult a computation, and I've got a server down in the basement. I've got equipment down in the basement. I've got filing cabinets in the basement. I have my studio here. So I did just too complicated. Maybe I'm wrong. Maybe I'm quite foolish for not doing it. And then there's the myth that I've always lived by it, but it's a myth because a small business reports their home office on their tax return. It is not a red flag to the IRS. There's a small business. Should we study and audit that return because it's a small business? Are they giving us good numbers? The IRS has the capability uh, by how you are filing to understand and put into perspective the kinds of numbers that are being reported to them. Yes, if the if the IRS is going to enforce some tax laws and come after you for some additional dollars, it's going to cost them to do that. Then they look at the amount of dollars that they have. Really, the IRS could be kept extremely busy and a more lucrative business for them if they looked at all the loopholes. That the larger the business, the easier it is to create and find and execute a loophole. Okay, third point. The results were released this morning, revealing the most three common missteps, common mistakes that small businesses make when doing their returns. No knowledge of your own financials. Well, I've already addressed that by telling you the exercise that I'm now going to now am going through for the second year in a row. I will know even more about my business this year than I knew about it last year. One new thing, though, in 2011, I have 6 months of Social Security to report to the government. First time I have ever done that, so I will be learning a little bit about it. There are lots of topics of conversation, and I would be remiss if I didn't share with you uh, the knowledge and the information of a good friend of mine, Barbara Weltman. If you've been following me any length of time, you know that Barbara has, well, I've been following her for 5 years and the information that she distributes, because nobody distributes useful information about small businesses than Barbara Weltman. Well, maybe she and I are tied. But in the last almost 2 years now, Barbara has very graciously given of her time and shared her expertise. Barbara is recognized by the New York Times as their #1 small business tax expert. And what an honor it was for me to be able to talk to Barbara. Actually, when we did broadcast that you can catch somewhere, oursmallbusinesstv.com, you can probably see some old broadcasts that I did with Barbara. Uh, she Skyped. We Skyped. She was sitting in her office in her home, her huge office in her home. She has these bookcases, and she shared with us. She gave at least an hour of her time every week for almost 2 years, and we are very grateful. And uh, this is the 15th year, 2000. Well, Small Business Taxes 2012 is the 15th year that Barbara has worked with J.K. Lasser to create this book. There have been over 200,000 copies sold. Your Complete Guide to a Better Bottom Line, Barbara Weltman. I like to have an exercise with this book. I paid $19.95 for this book. How much information would I need to? How much savings could I have to my own company, or new ideas on how to do something differently than I did them before, based upon the tax implications? I open up the book and read something, and uh, many times what I'm reading at that moment is worth far more than the value, the 1995 that I spent buying the book. So Barbara, thank you for that. Go to barbaraweltman.com, BARBARAWELTMAN, and I'm sure there's plenty of information about your 2011 tax return. We'll be coming back with more information in this area as we read about it and share it with you.